And oil prices right now look like this, $95.82 for NYMEX light sweet crude. For more on the energy markets, let's get out to Jonathan Kornfeld. He's Director for Asia at Hudson Capital Energy. Jonathan, when you look at what's happening in the oil markets right now, despite the EIA numbers that came out overnight, what does that tell you about sentiment in the markets at least?
Well, I think you're seeing an interesting thing right now in the markets. You've got the crude draw on the one hand, which was a very big draw, a surprising draw, and a build in the distillate and the gas on the other hand. What's happening is pretty simple, actually. You're just taking the inventories of crude oil in Texas and turning it into the refined products. The refineries are doing this. So you have one side drawing, the other side building. It's quite normal.
So there's nothing to be concerned about?
It's nothing to be concerned about. And actually what caused the market to come off was in Cushing, Oklahoma, which is a different region of the country. That's where the major delivery point for crude oil in the U.S. is. That actually experienced a build. And that's where the bearish sentiment in the market came from. That's why we came off by the end of the day.
Okay, why haven't we been able to see oil prices sustainably above $100 a barrel? I mean, it flirted with it twice, I understand, but we can't seem to get above that. Is it because the market just really can't support that price level?
I think the market can support it. I just think we've been on such an upward trend for so long. It's only natural for the market to come off. We are definitely in a long-term bullish market. So it's, as I said, it's only natural to see the market come back off to 90, 85. Maybe even 80, but I don't see it going much lower than that in the medium term.
Given that there are now increasingly pessimistic calls about the U.S. economy next year, are we going to see that denting the demand picture for oil then?
As the calls increasingly get worse and worse, then you are going to start to see demand dented, especially as housing increasingly gets worse and worse. You still see plenty of SUVs on the road in the United States, so there's plenty of demand. The demand is still there. It may start to slow down, though.
Okay, and then therefore, if you look at say a 3 to 6 month time horizon, would you expect to see oil prices falling back, or is the trend going to be upwards?
In the next 3 to 6 months, I would actually think that we're going to stay between maybe $90 and $100. I would expect in the rest of January us to rally, break 100 again, maybe go up to 105, a little higher. Okay. But I do think we're going to then fall back down again to 85, maybe even 80 in late Feb, March, April, that time period.
To what extent is the geopolitical premium priced in right now? I mean, every so often we get, Iran harassing U.S. Navy ships. We get talk about the nuclear program that Iran has. Right. Has that kind of been put on the back burner for now, or is that still priced in?
It's definitely priced in. The number you hear most often is about $15 a premium priced in for that. But I think we're in a pretty benign political environment right now. Everything is still there lurking. But I think Chavez is kind of concerned with his new currency that he's introducing. He's having trouble with Colombia with some hostages. In Iran, they're looking internally right now because they have elections coming up. But I think the boat that kind of went near the U.S. Navy ships, that might have been on purpose actually to kind of show a little strength as the elections approach in Iran, saying we're not afraid of these Americans, that sort of thing. But I think overall, it's a little bit of a benign environment. Okay,
so now on the supply side then, we've looked at demand a little bit, but on the supply side, does the picture look any better, especially with OPEC, as I understand it, producing pretty much near capacity?
Right. I don't think the supply situation has gotten any better, and I don't see it getting any better, even in the long term. There has been such a neglect on the investment of productive capacity in the oil markets for decades now, and it's really caught up to us. The reasons we're at 100 haven't disappeared, and they're really not going to go away in the long term.
Okay, but even if OPEC were to say we're going to turn on the taps a bit more to help ease the price situation, because a lot of countries like the U.S., not happy with oil where it is right now, could they realistically increase production?
They could, but not to the extent where you would see prices go back down to where it would make a difference. You're not going to see $50 oil because of that.
Okay, great. Jonathan, thanks so much for joining us and putting things into perspective for us today.
Thank you. It was a pleasure.
Appreciate it. Jonathan Kornfeld, Director for Asia at Hudson Capital Energy. Now, the Chinese markets are closing for lunch in just about 3 minutes from now. Food processor stocks in Hong Kong and China are under some pressure today. That is after Beijing announced a series of measures aimed at stemming rising food